Ladies and gentlemen, let's move on to a very informative and interactive panel discussion, which will shed light on how fintech and digital revolution can fast track the growth in Islamic banking. The panel discussion will be moderated by Mr. Mujtaba Khalid. He's the head of Islamic Finance, Bahrain Institute of Banking and Finance. Our esteemed panelists are Mr. Rahman Khan. He's the head of Finance and Administration at the Khaliji Commercial Bank in the Kingdom of Bahrain. Our second panelist is Mr. Asher Nazim, who is the CEO of Aeon Digital. Our third panelist is Dr. Rizwan Malik. He's the head of Standards Implementation and Strategic Developments at the AOFI. Please give a warm welcome to our panelists.
Use this in the language. Thank you, Aisha. You're doing a great job. We have a watch here as well, so people should know what that is. Thank you, everyone. It's an honor, Your Excellencies, to host you here. We've had some great speeches, and I think I agree with a lot of the Islamic finance industry over the past 2 decades has seen a tremendous growth. We also agree that Islamic finance is a big opportunity, especially obviously Bahrain has great opportunities of it, but especially in developing countries as well. So this is a great opportunity. Now it's poised to grow at double-digit growth going forward. It has tapered down a bit, but here we are in evolution in Islamic banking. What is the global value proposition for Islamic banking? How do we move from the traditional customers and tell to the world, look, we have something to offer? Now that's a lot to unpack, but I think fintech is one of those things, which will go and then, we'll take it from there, So I'll start with Ashraf, who's someone I look up to, an illustrious career, partner in EY, set up Aeon Digital, works with great, let's say, banks and financial institutions from the region in some great, tremendous stuff. And I'm sure you'll mention that as well. Please do. For us as well. In your experience, I should for both sides, right? Before working with financial institutions and now working with them. How have financial institutions, particularly in the retail side, leveraged fintech? And how can we use that to facilitate the growth of the Islamic
So, I think Nur Saab and others have alluded to the fact that Islamic Bank is all about connectivity for the economy, it's about impact, it's about growth. As they are younger institutions, so clearly a challenge for them is how to create scale. And now with financial technology, and more specific, exponential financial technologies, it is possible to build scale to significantly bring down the cost of acquiring customers, cost of serving customers, in terms of embedding yourself in the financial lifestyle of customers. So what fintech business or digital banking business is doing to banking is it is disrupting the business model, the traditional business model. What does that mean? So one is it is embedding finance into the favorite apps that me and you use on a daily basis. So whether it is Netflix, whether it is Starbucks, I don't need to leave Starbucks to make a payment. I can create a wallet account from Starbucks and make my coffee payment from there every day. So one, it is about embedding finance in the financial lifestyle of customers. So we're moving away from friction. Number two, at the basic fundamental level, what we are seeing is it is about redefining risk understanding of the banking system. And what does that mean? Let's take some practical examples there. When we open an account, we go through an eKYC, correct? Now, how is eKYC done traditionally? One-off note forms, etc., gets filed. In the world of tomorrow, the eKYC will be informed not just by your static data one, but rather with multiple sources of data. जो कि flowing कर रहे होंगे from your multiple bank accounts, all the transactions that you've been conducting day in and day out, in real time will be getting captured by the banks, and it will be informing your KYC and therefore updating. So what the eKYC updation for high-risk customers are in 1 to 2 years, For normal, it's once, highest is once in a year, others are once in 2 years. It will be done in real time from multiple sources of data, right? And therefore, the risk understanding will completely change. For example, that's one. Another example, financing, right? How financing is changing. So today, my financing, my credit scoring is done based on the salary certificate, right? Or a few data points. That is going to comprehensively change. For example, what we have seen in UK Experian is a data-enabled credit scoring engine. Or financing now will be informed, my credit score will now be informed not just by my salary certificate, but also by my all the bank accounts that I carry. Not just all the bank accounts, but also my spending habits, my telephone bill data, right? And that will be informing fintechs and banks that what my credit history is and therefore what my credit profile. I would say implication they बहुत सारे लोग जो कि informal economy में या gig economy में now that they are not able to get financing, they are now eligible because banks are able to understand this better. Similarly, payments, when you think about payments, remittance, international remittance, how much do you think the all-in cost is of a remittance transaction? Roughly around 8 to 10%. As a result of financial, all hidden costs, fees, charges, everything was correct. And today, as a result of new technologies that have simplified operations and admin, and the likes of WISE and others who are out there who are disrupting the remittance play, it has come down to between 3 and 4%. And that is disruption, right? And similarly, well-being. What does that mean for me and you? What well-being means is now, as a result of capturing the data, banks are able to understand better my spending habit, and tomorrow, investors are always regarding. So the bank can actually predict every आपने पिछले 3 साल से आप इस period में जाते हैं, and therefore, you know what? We are connected with Booking.com as well, and उनकी अच्छी deals चल रही हैं. So if you want to book ahead of time, you can get better deals on these hotels, this status, etc., without you leaving your banking app. Right? So it's those kind of very practical value-added service that banks are bringing, and therefore from being a necessary evil, right? Banks will, and therefore Islamic banks will also transform into providing something which is seen as offering value-added services as well. I'll stop there.
No, that's very interesting. Few points you mentioned specifically are very relevant to the gig economy element, because that's huge. That's picking up in Pakistan, so that credit scoring methodology and remittances. Of course, as we all know, the situation these days, but I'm very much dependent on remittances. That's something very interesting. So thank you for that. It's honest, because you probably already were here. Although my question was Salman, but let's skip that. It's one. Regulations obviously can facilitate growth of anything, anything that is not there. But we've seen this model as well. Regulation standards can also be counterproductive. You can have the best intentions, right? But if not done properly, it can also be counterproductive, right? What is IOF and how is IOF dealing with the fintech and Islamic banking space? Because there are a lot of fintechs and I should like to notice as well that in the UK, there are a lot of Islamic finance fintechs now based in Indonesia as well. But a country like UK, which is not majority Muslim, has a lot of Islamic fintechs coming up. But what is IOF's role? How is IOF playing a part in facilitating that? Hopefully not to do the opposite, but facilitate this.
It's a pleasure and honor to be here. Thank you very much for inviting me. It's a pleasure and honor to hear all that has happened. We did prior to this manifestation. I think we learned the most amazing part is the will to make a difference. I think that's very important for us to make an intention and then actually move forward in terms of what Shabari just mentioned. All this is very fascinating to hear, right? I mean, we're talking about sitting there, I can very quickly make a transaction without even moving an inch, and that can very easily happen. And Rabi has maybe mentioned the amount of transactions that have happened in Bahrain itself, let alone in the fintech space globally. All that would not have been possible from the ease of our profile, the culture from our home, if the necessary regulations are not in place. So I'll cover the regulatory part as first. So from a regulator's perspective, they have two roles in place, and those two roles are very difficult to balance. One is to ensure that there is innovation, which promotes the life of the fintech growth and development. However, the more important role, the primary objective is to ensure that there is stability in the market, right? I mean that, and so then to balance these two is a very challenging task. So in that, I think regulators around the world have gone through a paradigm shift in their thinking, in their mindset. They've allowed, they have always been prudent and conservative to a mindset that promotes and supports and facilitates innovation and growth. And all that Shabazz mentioned wouldn't have been possible without that. So regulators have done a tremendous job in terms of facilitating the infrastructure, enable these fintech developments, be it in the form of fintech regulation, open banking rules and regulations, or be the strategies from the government itself in the form of setting up fintech houses in the form of fintech bay. So this is a dedicated institution that has been set up to promote the development of fintech. It wouldn't have been possible if the right mindset, right regulations had not been in place. Now, when we come to standard setting bodies like accounting organizations or Islamic financial institutions, their role is to ensure that this base, this growth, continues in a manner that is good for the economy in general. It facilitates that growth. At the same time, we need to ensure that the governance principles, the accounting treatment, the Sharia principles from Islamic perspective are in place for them to conduct these business, these affairs in the right manner. So that's a very important perspective from a standard setting perspective. So coming to your question, from EOFI's perspective, today, and prior to that, I also take this point here that standard setters also have to be a bit patient in terms of developing their standards. They need to ensure that the market that they're developing a standard on has developed and grown, and it's widely acceptable market and mindset. So that perspective is very important. It's a national today in terms of developing a standard. So if from AOFI's perspective, AOFI has a very comprehensive strategy on fintech, on Islamic fintech in particular. We've set up a very comprehensive working group that looks after that after the fintech growth. And in terms of standards itself, we've got a number of standards that we're developing in the Islamic fintech space, starting with Islamic crowdfunding, which has, of course, globally acceptable and seen a lot of developments from that perspective. So the standard on Islamic crowdfunding will be available, inshallah, by the end of the year. In addition to that, we've got standards in progress on digital banking, on we have visited yet. I don't know if you've seen what has happened in the market. So we've got blockchain and smart contracts, we've got standards in place. So we are actively monitoring this space, but we have to be patient in developing the standard, making sure that the market has matured enough and it is widely acceptable in terms of the area that we develop standards.
That's very interesting, and I think that's is this public news?
It is very public news.
All friends as well. Okay, so moving on to Aman. So Aryan, as you know, some also mentioned, has taken first sandbox in the region was CBD sandbox, and there's been a push towards it. The financial institutions as well have obviously have a strategy of financial technology and digital transformation. Right? In your experience, actually, I'm sure you work with. Okay, so I'm sure you work with fintech companies as well as you have something in-house as well. In your experience, what are the benefits from a macro, let's say, level, but as an institution, what are the benefits in your experience you reach with digital transformation, financial technology, and what's the second question is, what's the best way to go about it? You partner with technology companies, you do something in-house, because I know you've done both.
First of all, thank you, Brother Mustafa, for the question and giving me this opportunity to speak on this topic. Till now, we have heard various uh, things about fintech, about digital revolution. The key word there is always convenience. How conveniently you can perform banking transactions, how conveniently you can perform certain transactions, right? If you allow me, Mr. I'll try to take a step back and just try to see the significance of the Islamic financial institutions in general and Islamic banks in particular. Today, as we speak, the Islamic financial institutions, they have asset size of around $2.8 trillion, of which Islamic banking alone is around $1.8 trillion globally. When it comes to the contribution, when you talk about globally held borrowing, the financial sector is a significant contributor to the economy. Around 80% of the GDP goes from the financial sector. Bharat GDP today is around $39 billion. Islamic banking assets are around $35 billion. Just to give you a perspective. When we talk about fintech now, how banks can partner up, let's see how what are the issues there. There was an issue. There was a survey conducted by KPMG in which the banks, 90% of the banks responded fintech as a threat to the business. Now, as they were talking about digital revolution, they responded as a threat. So when we are facing a situation, how or what are the ways forward? As you just mentioned, there can be what are the differences between in-house development or partnering with fintech. So when it comes to the in-house development, how banks can deliver that? First of all, you have to focus on the customer experience, right? Customer experience is the forefront of any banking institution of any industry. So you have to spend a lot on that front. On the other hand, you need to have those cost operational efficiency in order to be market competitive. When it comes to the fintech and the banks, the most probable or the most possible or the most easiest solution is collaboration. This is what's happening globally. Collaboration between the fintechs and the banks in general. We call it a marriage of convenience, in which there is a win-win situation for both. So we were talking about the relationship between the fintechs and the banks. The most probable way forward is the collaboration. That is what is happening globally. We call it, like I just mentioned, a marriage of convenience, in which there is a win-win situation for both. The technologies that have currently been developed or focused on is primarily mobile banking. Why mobile banking? Because mobile banking provides a ready infrastructure. We all know that banks as a competitive banks compete in a very competitive industry. So there are economies of scale, right? So in order to be competitive, you tend to spend less on research and development, go to focus on long-term returns, right? So when we partner with those fintechs, the first thing that happens, you don't have to create the whole infrastructure. You already have part of the infrastructure in place. What you can do, you can always leverage by using the APIs provided by the fintech providers. So if we partner with fintechs, the biggest advantage is basically operational efficiency. Plus, there are ways where we can enter into, or banks can enter into new businesses that have it's very difficult for them to enter on their own. As I speak from my own experience from Collegiate Commercial Bank, recently partnered with a company called Realize for earned wage access for the unbanked segment, for the white collar jobs, right? So if it were for our own, it would have been very difficult to enter into that territory. But since we already had fintech from available, we partnered with them to provide that service to bank and bank, right? When it comes to the internal development, yes, we had internal development, but the challenges we faced in internal development were cost related challenges, resources related challenges. So all those were being addressed by partnering with fintech firms, like as Ashok mentioned, as Islam mentioned.
But all these are this is the rosy picture, but it overall always go like this. Always there will be risks, there will be challenges. When I talk about risks, the biggest risk is cybersecurity. We all talk about digital revolution, technological advancement, but it doesn't come with straightforward. It comes with cybersecurity. There have been regulations from the central bank on the central bank of Ireland, and I'm sure other central banks as well on the cybersecurity regulations front. Sharia compliances. Now, when we talk about Islamic banks in general, our products are very well structured. They are as per a certain regulation, as per a certain standard, as Brother Mubarak mentioned, right? So when it comes to fintech, it becomes a little bit complicated. So this is a front where we face risks, the Sharia compliance. And the last thing is the technology, which is ever evolving, it doesn't stop. So you have to keep yourself updated. Challenges, just one last thing. The challenges we face other than the risk part are the infrastructure, availability of infrastructure, which is not available. So we have to build from scratch, or we have to partner with someone, as well as the human resource aspect. So these are from my experience, these are the issues, matters, and this that we face by partnering with the fintech firms and as well as in-house development.
Yeah, so thank you. Sorry, ladies and gentlemen, I'll just use this. That's interesting, Aman. Thank you for that. Look, so from my experience, I remember, the first time actually I heard about fintech from one of our colleagues, and then believe it or not, it was one of. So we used to have. There's a KFH, Kuwait Finance House. As you can see, one of our sponsors. Not to shout out, they didn't pay me. I'm just saying that. So we used to. Their CEO used to host a majlis of sorts at dinner every quarter. For all the CEOs and senior people. And believe it or not, one of the first lectures on fintech I heard was Ashif Bhai. He was invited, and these were all very senior people, and that was very eye-opening. This was like 4 years ago, So what we have pioneers here, mashallah. It's interesting, Aman, you mentioned, because during that time, right, I used to read papers and even Financial Times, and they're saying that within the next 5 years, like BlackBerry was obsolete. We won't see any banks, right? But one of the things they didn't realize was that a lot of people are willing to give money to established banks rather than to a tech company, And where we see ourselves here, what I've seen over the past 5 years, the best way is a partnership model. Banks on their own struggle, fintech companies on their own kind of also struggle. But if there's a partnership, a marriage of convenience, as you said, I think that is the best way. What I've seen, a lot of successful companies, yes, they are digital banks coming up, but they're in more developed economies. Let's say that. I have a lot of questions, by the way, but not a lot of time. So what I'll do is, if and this is a surprise, I didn't tell them I will ask this question because I want it from the heart. So fintech in Pakistan, in 5 minutes, each of you. Where should it start? Because there's a lot of things you can do. You mentioned a lot. So Ashif mentioned a lot of stuff. Rizwan also mentioned regulations. Aman also mentioned. Where should the roadmap? Because there is a lot of fantastic stuff, by the way, going on in Pakistan, as most of you would know, right? But in the future, where should it start? Because the challenges are different there. Financial inclusion is a challenge. Remittances is an opportunity, not a challenge. So where should banks start from? 5 minutes, starting with Mr. Ashir Nazar.
Right. So Pakistan as a market is a huge market with financial inclusion. It is a challenge, right? And therefore, with the advent of technology, what's going to happen is, again, building scale, creating an outreach will become very easy. I think the focus has to be making seamless customer acquisition, right? Customer onboarding, how do we do the KYC very well? And no, we are not there yet. And I'll give an example of a top bank in Pakistan, where the company were trying to open a bank account, and they said, actually, EKYC, are you? And then I had to walk into the branch. Then they asked me, is it for financing or deposit account opening? Direct deposit account opening. But then I asked, why should it matter?
Yeah.
And there's a lady who although financing के लिए कोई different system use कर रहे हैं, the two systems do not talk to each other, right? So financing के लिए अलग था, deposit के लिए अलग था. And I'm just thinking, I was talking to someone this morning, and they are like, जो in a same support program है, उसके लिए there's a completely different EKYC mechanism, क्योंकि जो आपका NIC है, उसका Urdu version is not being read well.
Is it still called Benazir? उसका नया पाकिस्तान अब फिर कोई और तीसरा नाम
It's
है या
one
फिर
post portal.
अच्छा, फिर ठीक है।
So point is, we are only 1% done with digital banking, and digital acquisition of customer, making that seamless, extremely important.
Yeah.
Number two is for established banks, they will go into payments, making payments very easy and low cost to transmit. And it will be a lot easier for them to give everyday financing, everyday small financing. We must have heard of API, right? Again, earned wage, actually, and a number of others who are coming up. But I think as a big bang, I don't see it, but I do see a transformation of the business model, bringing more people into the common pool, and from there, banking will become.
I think Mr. Bhai had a lot more to say. I think interestingly from a market like Pakistan, let me just share, come back, generalize it from any market from that perspective. Financial inclusion and financial exclusion has always been, I've been here about it for the last 12 years, and before that I was a case of, I didn't probably. But financial inclusion is definitely a challenge, but it's a challenge for market as well, for example. How many, the revenues that we've been talking about, how many people from diaspora are there who are working and only send revenues to Pakistan? Are they doing it in an Islamic manner? I mean, do we have necessary awareness to these people? Yes, everyone is using mobile, but do they know how the difference between a conventional bank and Islamic bank? So I'll move back from looking at myself and looking at Chinese let's say in Pakistan. People don't really understand. So awareness from an education perspective remains a continuous challenge for all of us. Sitting here with an institution and an academic institution here, I think we've got a role to play in terms of enhancing that understanding of Islamic finance for the layman, for the people in general who send back remittances. If they can invest, their role, they're earning money, and their role is to send back money or save a little bit if they can. And if the saving can be in a Sharia compliant manner, I can show you that the funding will be channeled in Islamic manner if they understand it, because the understanding is not there. So that's for Bahrain. And similarly for a market like Pakistan, which is huge in terms of financial exclusion, we back in the days in the UK, we did a study for State Bank of Pakistan on knowledge management and practices for Islamic banking finance industry. It was a huge survey for the whole Pakistan market. And if I remember, the statistic was that 18% of the people that we surveyed do not do banking because they don't believe in it. They don't have access to it. And there is a larger number which believe that Islamic is just same as conventional. There's no difference between the two. So even if you offer them Sharia compliant banks, they will not offer it because they don't have the same confidence. They say banking is banking ki haram hai, that mindset needs to change from a financial inclusion perspective. That knowledge and awareness is created from a market like Pakistan. A lot of good institutions are doing a lot of good work. For example, if I can name one, which is Kuwait, and doing a lot of good work at the grassroots level, making a difference for the general market perspective. If we can scale that up with the digital and fintech growth and development, channel it up with the apps or the other softwares, I think the impact will be far wider and it will be meaningful from that perspective. So that's how I can generalize it. Maybe it's a general statement, but rather we should work towards achieving that.
It is one measure, and I do agree with both of them. The biggest challenge that Pakistan as a country faces is the unbanked economy. Majority of the economy is unbanked. There is very less financial inclusion. Okay, so before we talk about fintech, before we talk about digitalization, we have to understand the ground problem or the root problem, which is the financial inclusion. In order to increase awareness in Pakistan about fintech or to revolutionize the banking industry in Pakistan, I think we have to understand one thing. Pakistan, when it comes to talent, there is no shortage of it. There are many fintech companies coming out of Pakistan. What Pakistan is lacking currently is basically the roadmap or a structure on which, and they can take a leaf out of Bahrain's book in that respect, because when it comes to the regulations, in terms of digital banking, in terms of banking, there is strong here. So, just to summarize the two things that I would recommend for Pakistan is number one, the inclusion, and number two, as we just mentioned, is to have a structured roadmap in order to implement those rules and regulations, because there is no dearth of talent there. So this is my question.
So we have to use this because I've been told that this is connected to Zoom. So apologies we should have checked that. But anyway, I think there's some great points here. One thing, I mean, and before we conclude, if there are any questions, I'll open that as well. One thing I think was missed is the fact that a percentage of Pakistan, a big percentage of Pakistan is in agriculture. And all major banks are ignoring farmers. SMEs, they will talk about SMEs here because they're SMEs here in these economies. In Pakistan, what I've seen is all major banks are ignoring farmers. And farmers face a big problem. You know this, I'm from the north, I'm from Punjab, so I know this. You hear about these clouds, you know, that go up during when they burn the husk. You know why they burn it? Because they can't afford fertilizer. So when you burn it, their measurable business says that the burn stuff acts as fertilizer. So it's not an easy way. Yes, they have an easy way to get rid of the what do you call it, the waste, but it also serves as fertilizer. You know, if you facilitate them with this, and their practices, so we speak to farmers, their practices are similar to practices with grandfathers. Mostly, I hate generalizing, but mostly in the underdeveloped villages you go, still, what their grandfathers. And still Pakistan is like the fourth or fifth largest producer of wheat, milk is third. So imagine, it's like even by 20% increase in profit. If we hear about the dollars issue and everything, it's 20% in exporting. So this is what banks, and that's where that's a real economic issue, and how you can link that with technology. Because you're not opening a bank in chunk bites. Yeah, you're not opening a bank branch in like a remote village, but you can leverage your technology. So this is something I think we should also look at. If there are any questions, I probably, because we're short of time as well, if there are any questions, we can probably take one, otherwise we go for it. Can I say about this?
It's not a question on you. The financial improvement impact message of COVID, we are addressing this guys. Fair is where somebody is saying that it is now 21%. As you mentioned, the yield is a problem, and we are one of the largest producers of wheat by but one-fourth of what the world average is. And so is maize is one of the finest crop we have, but still we are the lowest. We are using the technology, and farm to market inclusion is one of the key. If we want to increase the technology, we want to improve financially anyone who is living in the remote areas, the only way is to increase the farm to market approach. And I can. And last was summary, we have started our budget summary, like what we are really modeling. The only institute in Pakistan is getting model economic budget, and which entails all the proposals pertaining to all the sectors of GDP, including agriculture, manufacturing side, construction side, services side. And they are almost far more accurate than the government. So, I kept very proud of it. One institute which is giving a far consistent budget than our GDP working was far lower. My expenditure estimate was far lower than the actual ones. So the problem lies in the financial improvement. The financial improvement lies in farm to market. Agriculture is 23%, and the rest is 20% is retail goods. So the 43% worth of my economy, they are not contributing in my direct taxes, and they are not included financially. So this is the root cause. Secondly, the issue is very simple. If you want me, as Umar Sahib said, most of the speakers have said, that the contribution of Islamic banking or maybe the government or maybe mutual fund is far greater. And it is increasing every day. It's very fast. That is because of the faith of your deposit holder or maybe the banking system which we are looking at. So people, by and large, my population will trust Islamic. But as far as my system of government is concerned, next to IMF program, let me tell you very frankly, will not be in a position to come out of those programs. Because we have a huge budget. We have very typical problem like energy. Whatever we earn, we are dishing out 60% of what we earn. And if I want to make a zero-based budget, we all study zero student life, I have to collect 80,000 billion worth of tax. So we hardly recover 6,000. In order to achieve financial autonomy, so this is something which we need to consider.
I'd like to thank,
I can thank or you can thank, it's
Thank
okay.
you, thank you so much for the insights, great insights, and all those updated thoughts. Thank you so much.
Thank you, Mr. Mujtaba, Mr. Aman, Mr. Asher, and Dr. Rizwan for your practical insights. Thank you, Mr. Tola, for an interesting discussion.